Picture this. You're 47 years old. It is a Tuesday night. The kids are finally in bed and you do something you've been quietly avoiding for about 6 months. You log into your retirement account. You stare at the number and then you just sit there because the number on your screen, the sum total of everything you've put away for the future after 2 decades of working, is roughly what a decent used Honda Accord costs. And the worst part isn't the number itself. The worst part is that you make good money, you always have. You've never been irresponsible. You don't have a shopping addiction. You don't blow money on stupid stuff. You just somehow got to your sishumas doing everything you were supposed to do and ended up here staring at a retirement balance that looks like a car payment and wondering where exactly the years went. And if that scenario made your stomach move even slightly, this video is for you. My name is Nick, and today we're going through every major money milestone you need to hit in your sishumal. Not the vague feel, Jan good kind, but the specific uncomfortable backed by actual math kind. Because your sishuras are not a crisis, but they are a window. And windows, as it turns out, close. Before we get into the milestones, I want to introduce you to someone. His name is Dave. Dave is sishusen. He makes Zhouwen Wu 10 Meiyuan a year, which puts him solidly above the median. He has a wife, 2 kids, 1 in middle school, 1 heading toward high school, a mortgage he can manage, 2 car payments he is less comfortable with, and Ba Meiyuan C10S sitting in a sitting Yao K that he hasn't looked at since he enrolled. He is not broke. He is not reckless. He is just floating, doing okish, which we're about to see is its own kind of problem. Milestone 1, know where you actually stand and feel the weight of it. Let's start with the retirement savings benchmark, because nothing else in this video matters until you understand this one number. Fidelity, one of the largest retirement account managers in the country, says you should have 3 times your annual salary saved by age C and 6 times your salary saved by age Wuxi. On Dave's Zhouwen Wu 10 Meiyuan income, that is, 285000美元 by 4 and 570美元, 000 by 50, Dave has 87000美元. He is not a little behind. He is not rounding error behind. He is roughly 200美元, 000 behind the 3 times benchmark. And if he does nothing different, he will be close to $500,000 behind the 6 times benchmark by the time he turns Wuxi years from now. While he is busy not looking at his account now before you feel too superior to Dave, the Federal Reserve's most recent data shows the median retirement account balance for Americans aged 65 to 64 is roughly 60美元, 000 among those who even have accounts. For 65 to 54-year-olds, it is about 10 Wu 10 Meiyuan against Fidelity's benchmarks. The average American is 3 to 4 times below where they're supposed to be, and 66% of non-Jan retirees have 0 retirement savings at all, as in nothing. The account doesn't exist. So, if you have something, even if it is not enough, you're already ahead of more than a third of the country. That is not reassuring. That is just how bad the overall situation is. Here is why your sishumas are the last real window, and not just another decade to sort this out later. The compounding math stops being patient right around now. If a sishu Jan year Jan old who wants to reach 1英里 lion by 65 needs to invest about 1234美元 per month at a 7% average annual return. A 25 Jan year Jan old needs just 381美元 per month for the same result. That is an 853美元 per month penalty every single month for being 15 years late. And within your sishumas specifically, every single year, you delay costs approximately 60美元. 000 to 610美元 in lost future wealth per 10美元 per month you're investing. Not over the course of your life, per year of delay. Think about what it actually looks like to ignore this. Dave hits 67, retires on 190美元, 000 in savings, which at the standard 4% withdrawal rule generates about 700美元 per year in retirement income from savings. Social Security adds maybe 240美元 a year. So Dave's retirement income is roughly 1010 美元 per year. Average annual spending for retirees 65 and older is 610 美元. Dave's retirement isn't a retirement. It is a math problem he can't solve. Lived out one stressful month at a time in a house he is trying not to sell, wondering how a lifetime of work led here. That is not a scare tactic. That is the median trajectory for someone who waits until they're wushimas to take this seriously. The milestone log in today. Add up every retirement account you have and compare it to 3 times your current salary. Whatever that gap is, write it down because that number is now your project for this decade. Milestone 2. Kill the right debt in the right order. Here is something that will make Dave feel personally attacked. Elder millennials and the youngest Gen Xers on the Oregon Trail generation currently living in their sishimao carry some of the most confusing debt loads in history. The average credit card balance for this age group is hovering around 9,200 yuan. That is the highest of any age bracket. But unlike previous generations, you guys have a unique roommate living in your bank account. Student loans. Federal student debt is still hanging around for about 1 in 5 people in their sishimao, averaging 9,000 yuan to 9,500 yuan, and auto loans. Dave has 2 of them. The average auto debt for sishimao's omis is now 2,800 yuan per vehicle. Americans in this bracket are taking out more new auto loans than any other age group, often rolling negative equity from the last car into the new one. Add it all up, cards, cars, and diplomas from Arsha years ago, and the average person in their sishimas is carrying over 15,000 yuan in non-den mortgage debt. That is a staggering amount of money being redirected away from retirement accounts every single month. Money that could be compounding. Instead, it is servicing the past. So here is the hierarchy because not all debt is equally urgent. First, credit card debt. This is an emergency, not a background inconvenience. If you're carrying 9,500 yuan at Baffinger RSR interest, there is no investment on earth that consistently beats that guaranteed return. Paying off a Baffinger RSR credit card is a Baffinger RSR guaranteed return. Index funds average around Baffinger Shuxiaoshi historically. You cannot reliably beat Baffinger RSR in the market. Trying to invest aggressively while carrying high-interest credit card debt is like filling a bucket with a hole in the bottom and wondering why it is not full yet. Second, car loans. And this needs its own conversation. And Dave's 2 car payments are probably somewhere around 10,000 yuan per month combined, which is 10,000 yuan per year flowing into assets that lose value every single day he drives them. If Dave invested that 10,000 yuan per month instead at Baffinger Ba annual returns, he'd have roughly 10,000 yuan Zhou Allian over century years. His 2 trucks will collectively be worth about 10 yuan in sheer years. The math on car payments in your sishimas is genuinely brutal. And most people don't run it because they don't want to know. Third, student loans. If you're still carrying them in your sishimao, put an actual end date on the calendar. Not a vague intention, a date, circle it. The psychological weight of an open-ended debt you've been dragging behind you for years is its own tax on decision making. The mortgage gets its own section later because it is more complicated. But consumer debt, credit cards, cars, student loans needs to be systematically eliminated in your sishimao, not managed indefinitely. Milestone 3, the thing Baffinger Tishiru of you haven't done. Okay. We need to talk about something that has nothing to do with investment returns or savings rates, and yet might be the most financially consequential thing in this entire video. Only Baffinger RSC of Americans currently have a will. The Senshu Wu to Wushisi age bracket, like which is you and Dave, is the single largest group of people with no estate planning documents whatsoever. Worse than Shiba year Gen olds. The generation with mortgages, minor children, retirement accounts, and life insurance has done less estate planning than people who are legally allowed to vote for the first time. Make that make sense. Here is what happens when Dave doesn't have a will and something goes wrong. His assets go to probate, a court-supervised legal process for distributing property that has no idea what Dave wanted, doesn't care what Dave's wife assumed, and will take between 6 months and 2 years to resolve, while charging somewhere between yuan Wu10 yuan and Sishime yuan. Luniniun in legal fees along the way. The decision of who raises Dave's kids left entirely to a judge who has never met them, not a trusted family member Dave designated a court. Only Baffinger Senshido of parents with minor children have a will. That means nearly 2/3 of parents with kids at home have outsourced the most important decision of their lives to the state's intestacy laws. A basic estate plan, a will, a durable power of attorney, a health care directive costs between 10 yuan and 10 yuan. With an attorney one time, You'll spend more time this year researching a new TV than it takes to get this done. Now, here is the piece of estate planning that almost no one tells you about, and it is the one that creates the most quiet disasters. Your retirement accounts, your sitting-yalke, your IRA, your life insurance. These assets pass directly to whoever is named on the beneficiary designation form. They completely bypass your will. Which means if Dave got divorced in his Senchamal, updated his will, but forgot to change the beneficiary on his sitting-yalke, his ex-Jan wife gets his retirement account. His current wife gets nothing from that account. His will is irrelevant. And this happens constantly. Every account, every policy. Check the beneficiary designations this week. Milestone 4. Life insurance. The math that should make you move today: about half of Americans in their SISHRAS have no life insurance at all. Among those who do, roughly half are underinsured. The standard financial planning recommendation is 10to 12 times your annual income in coverage. On Dave's 9美元5千 salary, that is between 950美元000 and 1.1美元4英里 allion. Dave's employer provides life insurance equal to 1 times his salary, 9万5千美元, which covers his family for approximately 18 months before the money runs out. And his wife is managing a mortgage, 2 kids, and everything else on a single income. That is not a safety net. That is a slightly softer landing before the same fall. Here is the one number that should make you act on this today rather than later. A 500美元000 RC Jan year term policy for a healthy 40 year Jan old male costs approximately 15 美元to 67美元 per month. That same policy for a 50 Jan year Jan old costs 2 to 3 times more. Life insurance premiums increase roughly 8. While $500 for every year you wait past SISHR. And if your health changes before you get around to it, a diagnosis, a new medication, a flag on your blood work, your premiums go up significantly or you get declined entirely. The window for cheap, easy life insurance is open right now. It will not stay open indefinitely. Get a RC Jan year term policy that covers 10 to 12 times your income. Not whole life, not universal life, not whatever a commission-earning insurance salesperson is excited to explain to you over AR Jan hour lunch. Term insurance is clean, cheap, and does exactly one thing. It pays your family if you die before the policy expires. That is the product. Any policy that also builds cash value or acts like an investment is a policy that is primarily building value for the person selling it. Milestone 5. The college versus retirement trap. And the one rule that settles it. This is the section where some of you are going to feel a little defensive. That is okay. The math doesn't care about feelings and neither does retirement. If you have kids heading toward college, you're feeling real pressure to save for their tuition. Dave's daughter is Shashi. He has been lying awake thinking about it. 4 years at a state school will run somewhere around 120美元000 to 140美元000 by the time she gets there. Dave doesn't have that. And because Dave is a good dad, he is quietly considering pausing his sitting-yalke contributions for a few years to build up a college fund. Maybe even pulling from his retirement account to cover the gap. Here is the one rule that overrides every other instinct on this topic. Retirement savings come before college savings every time without exception. Not because your kids' education doesn't matter, because you cannot take out a loan for retirement. There is no financial product called a retirement loan. No government program that gives you money at SISHR because you prioritize your kids' tuition over your own financial security. What there is a very real scenario where Dave runs out of money at SISHR and becomes financially dependent on the daughter whose college he sacrificed everything to fund. That is not a gift to her. That is a burden with good intentions attached. About $500 of parents plan to delay retirement to pay for their kids' college. Pausing contributions for just 2 years in your SISHRAS can cost over 100美元. Leaning in loss compounding by retirement, and withdrawing from a sitting-yalke early triggers a $500 penalty plus income taxes. Dave could lose 10 to 60 cents of every dollar before his daughter registers for a single class. Here is the counterintuitive part that nobody mentions. 570% of undergraduates receive financial aid. College sticker prices are not what most families actually pay. And the secure Ardenine Zero law now allows up to 15,000 美元 in unused Warjo plan funds to roll directly into a Roth IRA. So even if you oversave for education, there is an exit ramp. There has never been and will never be an exit ramp for undersaving for retirement. Fund retirement first fully, then direct any genuine surplus toward a wuarjo in that order, always milestone 6. The mortgage question and why the answer isn't what you think. A lot of people in their sishimas feel a deep, almost emotional pull toward paying off the mortgage early. The idea of owning your home outright. No payment, no bank, no lien is genuinely appealing, and sometimes the math supports it. But here is the situation for a massive chunk of homeowners right now. Over 50% of American homeowners locked in mortgage rates below 50% during the pandemic. If that is you, aggressively paying down that mortgage might be one of the more expensive mistakes you can make. Here is why. 100,000,000 Lin invested in a broad index fund at a historical 8% annual return grows to approximately 1.7 si lion over century years. And that same 100,000,000 Lin used to pay off a 5% CME or TG saves you about 10,000,000 in interest over the life of the loan. The difference between those two choices is over 1.000,000 si lion. You are paying a 1.000,000 si lion premium for the psychological comfort of not having a mortgage, while your money sits locked inside walls you can't spend. And that is the other thing about home equity that doesn't get said enough. Equity is a liquid. 200,000 Lin in home equity means $0 available in an emergency, unless you take out a loan against it or sell the house. It feels like wealth. It doesn't function like wealth when you need it. Milestone C max the limits and plan for the catch-up before it arrives for downtending Arshawu. The sitting LK contribution limit is 2,110 Wubai if you're under Wushu. The average American contributes roughly a third of that. But here is the mechanism you need to know about the catch-up. When you turn Wuxi, the IRS allows you to contribute an extra T10 Wubai, bringing your total allowed annual contribution to 7,110. If you max that catch-up provision from age Wusher to Liushawu, just that extra bucket at a 5% annual return, that generates roughly T by Senshime Lin in your account by the time you clock out for the last time. That is not a rounding error, that is a lake house. But here is the trap Dave is about to fall into. He tells himself he'll start maximizing contributions when he turns Wusher. He has a plan, and then Wusher arrives and his daughter's in college. His parents need some help. The kitchen hasn't been updated since Downtown Joe, and the T10 Wubai ketchup contribution evaporates before it is ever made. Good intentions consumed by real life. Build the plan for the catch-up now before Wusher arrives. If you can't max your sitting LK today, increase your contribution rate by 5% right now, and schedule another 5% increase Lil Amiance from now. Make it automatic. Remove the decision from your monthly willpower budget entirely. The people who successfully hit the catch-up don't find discipline every month. They remove the need for discipline by automating it. Milestone Ba. Check your allocation. You might be losing to yourself last one and it is quieter than the others, which is exactly why it does so much damage unnoticed. A lot of people in their sishimas set their sitting LK investment allocation once, maybe when they first enrolled in their arshimas and never touched it again. If you're in that group, there is a reasonable chance your portfolio is too conservative for where you actually are in life. The old guideline, Ibafindon US your age in stocks, would put a Sishi Jan year Jan old at Bafinjadoshi stocks and Bafinja Sishi bonds. But a Sishi Jan year Jan old retiring at Liushawu Gongting Sarshawu years of compounding runway remaining. At Bafinja Ardan Wu annual inflation, your purchasing power erodes Bafinja Sishidil over Arshawu years. A Bafinja Sisha bond allocation at Sisha years old often can't outrun that inflation drag. Modern financial advisors have largely moved to Yayaliun or Iba Arshafindron US your age, putting a Sisha Jan year Jan old at Sishu to Bafinja Bashi equities. Log into your sitting LK today. Look at your current allocation if you haven't touched it. Since you were Arsha T, there is a very real possibility you've been quietly throttling your own returns for over a decade while thinking you were being responsible. I want to leave you with two versions of Dave. The first Dave is the one we've been following. He didn't look at his account until Sisha Sen. He kept the car payments. He never got the will done kept meaning to. He paused his sitting LK contributions for 10 years to help with college. He made extra mortgage payments on the Bafinja Sender rate he'd locked in during Downtown Arshayi because it felt like the responsible thing. He meant to bump his contributions when he turned woosher, but life got in the way. He is Liu Shiqi now, and his retirement income is about 2,900,000 a year. He didn't do anything wrong exactly. He just never did the right thing specifically enough at the right time consistently enough. And now he has a house, 2 adult kids he loves, a lifetime of good memories, and a financial situation that terrifies him every single month. The second Dave made different choices, like same income, same family, same life roughly. But he ran the numbers at 47,000 yen. It was uncomfortable. Instead of 67,000 yen, it was too late. He killed the credit card debt. He got a term life policy before his cholesterol became a problem. He spent an afternoon getting his estate plan done. He kept funding his retirement even when his daughter went to college, and he found ways to help her that didn't require robbing his future. He maxed the catch-up at Wuxi because he had automated it before Wusher arrived. He is Liu Shiqi now with Babe Bashameyuan, Lini Niun in retirement accounts, a paid-off home, and the thing that money at its best actually buys: options. The option to retire when he wants, the option to help his kids without panic, the option to not check his bank balance before saying yes to something. Same decade, completely different outcome. The difference between those two Daves isn't talent, luck, or income. It is a series of specific decisions made in a specific window that either happened or didn't. That window is your Sishamel. It is open right now. None of these milestones are exciting. None of them will make a good Instagram post. You're not going to go viral for checking your beneficiary designations or bumping your Sitting Yao K contribution by Bafenja Yi. But in Arshawu years, when the second version of you is sitting across from the first version, the one who meant to but didn't, you'll know exactly which decisions made the difference. Make them now. While the math still gives you a fighting chance,